Welcome to the Decent Crypto Podcast. Today is Saturday, July 23rd. We are live from New York City. I'm here with Matthew Blumberg and from Paris. I keep forgetting this, man. Matt, how you doing, brother? How's ETHCC? Give us a little recap.
Dude, ETHCC, man, what a great scene. Honestly, like, just the only people left now are the ones who are like not bothered about the bear market, and so it's just been like a lot of really positive conversations. You know, a lot of builders, a lot of people that have seen ups and downs in the market before, and everyone's just kind of enjoying. I mean, you're in Paris in the summertime. How much better could it get? Sunset's like 10 p.m. here.
The real question is, how's the Rave?
Ooh, the Rave. You know what? The music was actually really good. Like, obviously, like, to me, like, it was really good because I like house music. But, like, talked to a bunch of people. They were like, yeah, man, like, we're more used to, like, Berlin techno. So to us, this just sounds like top 20 pop. Like,
so everyone's leaving and going to Berghain.
Everyone's leaving to go to Berghain. Yeah, exactly.
Okay, nice. Real quick, I'm actually interested in this. So, like, the idea of ETHCC is to bring all the Ethereum developers together. And
yeah, I mean, it's
talk shop.
Yeah, it's broadly similar to like ETH Denver or ETH Amsterdam or ETH New York. It's like a lot of builders. Now they had an issue though where like they issued the tickets to this thing as NFTs on Polygon. And like as soon as you put something on the blockchain, like, you know, it's like publicly mintable as an NFT. And so a whole bunch of bots came in and like swooped all the tickets. So the only people that actually had tickets were people who were scheduled to speak. And so it was really just like, you know, like a bunch of people like jerking off watching the burn, right? It was like,
nice.
Will you come to my talk if I come to yours? And like talking to people, like, you know, they got like the wristbands if they went to the conference, and it's like that means that like you either work at a protocol that like sponsored it, and so like you had to sit at the table answering questions, or like, you know, you were like giving a talk or something. Those people seem exhausted. Like the people that are actually just going to the side events, which is always the play, like they seemed extremely happy, including me.
Is that what you did? That's what you did, right?
Just the side events, man. I wasn't giving a talk at ETHCC. Our podcast hasn't blown up that big yet. Next year we'll have a little activation only at the Rave though. I love these activations. This is such a good idea.
I know. All right, so let's get into it, Matt. What happened this week? Our boy Elon with the paper hands.
Paper hands Elon, man. Oh,
paper
my goodness.
hands Elon.
They sold so there's a disclosure.
They sold $975 million.
Yeah, it was like 75% of their Bitcoin holdings, man. That's pretty rough. Like, even miners aren't selling that much, right? Like, broadly speaking, right? Like, some of them have to, but like, you know, this is like a real paper hands move. I guess when you're a public company, people care about more than just like the token price or like the decentralized feature. Like, people actually care about having cash on your balance sheet, and like they were worried about having to like take like a big write down just due to like the way that accounting laws apply to like holding Bitcoin on your balance sheet. So they didn't want to take the write down. They sold it all at a loss, I think.
A tiny little loss, yeah. Their average sell was around like 29K.
Could be worse. They didn't get liquidated.
Could be worse.
What was their average buy?
What was really funny is that their average buy was around 30K.
Yeah,
31K maybe. Yeah, 10% loss or so. Dude, the funniest part was that it looks like, so Luna initially caused that crazy crash from like 42K to 30K-ish, whatever, right? And it looks like right around the time that Tesla was like unloading their positions, that is what caused that next dump from like 28K down. And that was like the thing that wiped out Three Arrows and eventually Celsius and BlockFi and everybody else.
Which in turn wiped out everybody else, like on the deleveraging, right?
Yeah, exactly. Which is crazy, right? Like, crazy to think about if that really was the last straw. You know, which makes me think, like, this is not a macro podcast or anything, right? We have a macro corner every now and then, but it's like, just looking at these things, this kind of cycle, it just looks like way more of a deleveraging than a crazy, like, tech bubble that exploded, you know? In fact, like the crazy tech bubble that exploded, like I felt way more like that in 2017. Whereas like I really don't know what's going on right now. Like, none of this stuff makes sense. That definitely happened last year. Like, we got the Irene Zhao, DAO, whatever, crazy NFT projects. Like, all this crazy stuff did happen, right? But it seemed like a lot of the real, like, speculation was in just absolute over-leveraging. And it seems like that deleveraging is kind of over. And, like, coming back to Tesla, you know, the fact that they sold such a big position, the market absorbed it, and, like, yeah, we went down to, what, 18K or whatever, but they were like one of the entities that caused that huge run-up early last year. And for them to have sold a bulk of their position, the market ate it up. We're kind of seeing a little bit of a recovery, or at least kind of holding around those levels. Like, it's interesting to see that. Like, I think it's actually a net positive for the industry that, you know, somebody who clearly doesn't believe in this stuff as much as they said, they're out for the most part. They're still holding their Dogecoin position. They haven't sold a single penny of their Dogecoin position. They disclosed
all they
that
have left
as well.
is probably a single penny. I mean, maybe that's why Doge was pumping earlier this week, right? Like, it had like a solid like 10, 12% day at one point. Shiba Inu similarly followed.
It's crazy that that's a solid day for Doge. That used to be
12%.
They used to be like
a quarter of a
one
second.
tick.
Yeah, a tick. Yeah. But I mean, I broadly agree that like the setup right now is pretty reasonable for like a recovery, like a melt up is what we used to call it in equities markets, where it's just like stuff just goes up a little bit just because like, you know, there's like a lot of these events are de-risked, right?
Yeah, a lot of the forced sellers are out, right? Like the people who are going to have to sell are out. The sellers are in general drying out. So, yeah, in general, I think this is a net positive, right? It's like, go hold your Dogecoin, hold whatever else, like
hold your
play
Doge.
games with Twitter, or I don't know, do whatever else you're doing. But it's like, and actually, like one more thing, do you think this was board driven? Like, did they say why they had to do this? Did they just want to move into a more stable currency? I think there was an actual quote, right, just to like reduce the volatility of their balance sheet. Like, that's why they sold.
Yeah,
do you think this is board driven, or where do you think the reasoning comes in? Like, just to get more cash right now, given the financial conditions?
Yeah, I think, you know, it's not a coincidence that like this happened like along with the release of like quarterly statements, right? Like, they, you know, someone on Tesla's accounting team was clearly, you know, trying to make it so that like they're, you know, if they were going to release like they released some numbers, like for example, like they've been like having to like increase their costs in China or their expenses in China, right? Because like they just keep getting locked down, right? And you know, like with any kind of like negative news, and like obviously like just broadly the macro environment's not great for a company like Tesla. Like they need to send a like message to the market that like, look, we have enough liquidity, we're going to be fine. That's a, you know, I don't know if it was board driven or what, but it's just like it's reasonable.
Save the stock price, kind of.
Yeah. I don't know. Feels pretty good.
Well,
feels pretty bullish for Bitcoin here, honestly.
Yeah, bullish for Bitcoin. I don't know what it does for Tesla, but I think probably actually bullish for Tesla too. Like bullish for Tesla stock. Not financial advice, of course.
I don't know.
All
about
right,
stocks,
let's move
man.
on. Yeah, I don't know about these stonk things. Okay, Tesla, you're out. Moving on to more, you know, respectable financial players. Three Arrows Capital. A lot of interesting details coming out this week about what happened with Three Arrows. A lot of documents, very notable quotes. One notable quote. Okay. No, what was now? I'm going to butcher this now. Now I already butchered it. It was like... okay. What? Hilarious text exchange. If you don't know what we're talking about, there was this little text exchange between one of 3RAC's biggest creditors and their head of trading, I think. This guy Edward, I think his name is. And the guy's like, oh, you guys are all okay, like with the Luna situation, right? And this guy Edward's like, oh yeah, we weren't really that exposed. We already marked it down to 0. It's not going to be a big thing on our balance sheet. He's like, okay, that's good. follows up. It's like, okay, I think we need to call back that loan for whatever amount. The guy's like, okay, yeah. So a lot of stuff came out. Like, what were the notable documents, notable conversations, or just like pieces of like evidence or like new information that was released?
So there was a leaked affidavit from Three Arrows' liquidator, right? So they have, I guess it's like 2 liquidators in the British Virgin Islands, and I'm not sure who leaked it, but like, it was like storming Twitter at one point, and it was about 1,000 pages of documentation on a whole bunch of matters, right? So I would say like the core pieces that I found the most interesting was like just at the start, like the liquidator goes through like, here's what we've been trying to do, here's like what we did. Like they've been trying to gain access to Three Arrows' Singapore office, ideally to get some hardware wallets and private keys and whatever, and they just like can't access it. Like
apparently there was a guy there. There was like a guy at the building, like at their office. Right.
They sent someone to the office, and it was completely like, shut. Right, it was the doors were locked, nobody was there, and Three Arrows' like legal counsel was trying to say like, oh no, like there wouldn't have been any documents really sent to that office, like it wasn't really like a big part of the business. And the liquidators like fired back like, yo, like while we were there at the office, we like looked at the mailbox. There were like a whole bunch of documents just like waiting, addressed to this office, like in like Sue and Kyle's names, right? Like there's clearly some documents here. Anyway, so it was just kind of an interesting piece, that first part, just to like get an idea for like, what is going on, right? Have people been in touch with Sue and Kyle? Like, what kind of meetings are being held? Like, what are the creditors like able to participate in? Are they on conference calls? There was like a big creditor call like last week, I think, on Monday. Mm-hmm. And then the core thing that I found the most interesting was Kyle Davies has an affidavit. It's about like halfway through. It's like 300 pages into this like 1,000-page document, and that details out, roughly speaking, like here's where we stand, right? Like here are all of the loans that we owe, and like here's our like rough ability to pay them. We don't have any. So the big one was to Genesis, right?
The impact of this is crazy. Like Genesis, it seems like might be completely wiped, or all of the digital currency group. It looks like they are going to be short like $2.5 billion, close to $2.5 billion that they loaned to Three Arrows Capital.
That's incredible, man. Like, given like the estimates that like they were, and like what kind of collateral ratio did they have?
So they provided $1.2 billion of collateral for a loan of $2.4 billion. So, the loan was like twice as big as the collateral. There are different ways that you can kind of phrase that, but weird way to do it. And like this guy from the block pointed out, like how would you make a loan like that without their balance sheet and their assets being audited by a reputable firm? Like it's pretty wild. I don't know what kind of risk management practices. There's those Lehman Brothers risk management T-shirts that everybody likes to wear. It's like there's going to be a lot of Three Arrows and Digital Currency Group and all these risk management T-shirts.
BlockFi risk management.
Yeah, absolutely. Or Celsius risk management. I think Celsius is the funniest one.
Celsius is pretty funny.
Yeah. Okay, so this is kind of now. Oh, okay. We have to mention the yacht. Like we can't mention the yacht. So there's apparently a $50 million yacht that they bought with borrowed money, with borrowed funds, and they were like allegedly like bragging about it.
Is it like certain
going to be the biggest
borrowed funds that were like?
It's not certain. No,
that's
these
the
are
allegation,
rumors.
right?
Yeah, exactly. And so they were. No, we should mention at the same time, they have finally spoken out, right? So there's a Bloomberg article that came out, and they're addressing some of this stuff. They're basically saying, the big quote, the headline was, "It is regrettable." So it's interesting to see. I guess they have maybe some regrets, or they say it is at least regrettable.
They have to, right? Because they have to, like, as fund managers, like, you know, they're basically like trying to get the fund liquidated so that, like, they can try to, like, get the creditors whatever they can, and they need to, like, sort of show that, like, this isn't just like we were degenerately trading, like we were like way over gambling, and like that's why you have nothing. They need to sort of show that, like, from a reasonable standpoint, like they regret that, like, that there were mistakes made, like, and that they're being, like, kind of transparent about it, right? And so it is regrettable is, like, a very good, like, base, like, thing to say, to be like, obviously we regret it, right? To be like, look, we do feel bad, right? Like, we weren't just, like, you know, fucking around with, like, other people's money, like, without feeling bad, at least, about it.
I mean, it does seem like that's exactly what they were doing. But,
I mean, you know.
you know, anyways, like, it, you know, in the article, they mentioned a few things. They mentioned that a lot of this was just unanticipated, that the price of these assets would go this low. They did not anticipate that Luna would basically go to zero immediately. They also mentioned that they were too close personally to Do Kwon, and they put too much faith in that project after, like, getting to know him, since they were both based in Singapore. Yeah, they basically said, yeah, like, as you mentioned, they basically said that they want to try and work this out. Sue said, you know, like, they didn't like abscond any funds from the company. They were actually putting in more of their own capital as it was going down. These are all their claims. So definitely contrary to what a lot of the rumors are, a lot of the memes are, things like that. You know, they're starting to speak. They also said that they're going to Dubai to try and avoid death threats from some of the crazy crypto people. Direct quote, paraphrased quote, but quite close.
Crazy crypto people. That'd be a great NFT collection. We got pitchforks and shit.
Oh man, yeah. Yeah, the other funny part, this guy Frank from the block, he pointed this out too. The Bloomberg reporter did not remove any of Sue's, like, the ums and the uhs and the maybes and any of that stuff. Like, not a single one. It's, you know, and he uses a lot of those if you hear him speak ever. And they didn't remove a single one. It's just like a low key, just like, fuck you. Really funny. So yeah, I think now we're kind of seeing the remnants of this. Not even the remnants, just kind of like the ashes, you know, like the dust is starting to settle a little bit. We're seeing where all the bombs really actually exploded and what the rubble looks like. We're just starting to see that now.
We're getting way more visibility now than we've ever had before, right? Like, by, like, orders of magnitude. One interesting thing that I'd just love to point out is I guess like the Genesis loan was partially backed by a little bit of collateral, right? So it was like AVAX tokens and I think it was NEAR tokens, but like way more AVAX. And like if you were following the price trajectory of AVAX when Luna blew up, that it was like by far the most down badly, right? I mean, on a day when Luna was down 40 or 80%, when Luna was down like 80% in one day, like when it broke like $1 threshold, AVAX was down like 35, right? And you know, you got to wonder, like, and according to Kyle Davies, like a lot of like their entire AVAX position that they were holding as collateral at Genesis got liquidated already.
Interesting.
So you got to wonder, is that bullish for AVAX? Is that bullish for NEAR? Right? Like the same thing that we were saying about like Tesla selling their Bitcoin is it bullish for Bitcoin that like now the forced seller's out?
Yeah, absolutely. I think now we're seeing that all the forced sellers have been forced to sell. Like it's kind of, it's not over, but it's like not saying the prices can't go down more. Definitely not financial advice, but it's like, yo, a lot of the people, the big players that were going to get wiped are kind of wiped. Yeah. I think there's a few other things that are still TBD. Like, we still need to see what happens with the whole Celsius situation. I think more than that, I think a lot of I don't know. Do you think there's like a lot of other kind of parts of this that need to play out still, or is most of the not even forced selling, just kind of like the events that are going to unfold? Has most of that happened?
We still haven't seen Sailor get liquidated yet.
I think Sailor's all right. His is like 3K, 5K, something like that.
I mean, I saw a great tweet where it was like, what if like Max Payne is that the super cycle is real and like these guys just happened to get liquidated on the way, and like everything is actually up only from here. Like that's Max Payne.
It definitely. I think, Jeebus tweeted this too. He's like, this. If we go straight to all-time highs here, that would be the most hated all-time high of all time.
That's funny.
Yeah. But, both Tabasco, Sam Trabuco from Alameda, and SBF are both turning bullish. So,
interesting.
Publicly bullish, at least.
Yeah,
so,
yeah. Hey, I mean, I'm not going to follow literally anyone's advice.
Yeah, that's the best rule.
Yeah.
Speaking of not following anyone's advice, let's get into our newest segment, Not Financial Advice. Matt, we had another listener call in asking us, hey, I've been doing some crypto stuff. I getting more involved in this space. Maybe I'm trading. Maybe I'm investing. Maybe I'm starting to meet more people. Maybe I'm working in the space, and just kind of want decent crypto podcasts. Matt, your advice, my advice. Maybe it's life advice. Maybe it's personal advice, but it's not financial advice, right? So
right.
People have been writing in. We did one of these segments a couple weeks ago, and we're going to do one more right now. So let's read this. This comes in from Andrew. Andrew says, Dear Decent Crypto Podcast, I quit my Web2 job as a L6 software engineer at a FANG company to join a crypto startup last year. The early days were joyous. It felt inspiring to be working on scaling Ethereum with some of the brightest people in the whole world. As you can imagine, a bulk of my compensation in those days was paid out in the native token of the project that I'm working on. Ever since I've joined, the token is down over 90%. Every other company in the space has frozen hiring. It seems like layoffs are imminent for us. And even the old company that I used to work at has frozen hiring. What do I do now? I'm in a worse financial state than I used to be. I don't really know where to go from here. Please help me, Decent Crypto Podcast. Matt, why don't you start?
Wow, that's really dark, man.
Yeah.
That's
I
think a lot of people in the space are probably feeling this way right now.
Yeah,
right?
absolutely.
Like,
let's start with number one. You could have already been laid off. I know a lot of people who were in that spot. So number one, be thankful you still have a job.
Yeah.
But yeah, continue, Matt.
I guess, when it comes to like compensation in the native token, like there's a reason that like VCs like make heavy utilization of like perps, right? Like they buy in and then they're able to like hedge their exposure as the tokens unlock, right?
Do you want to explain, like, just in 30 seconds how that works or what that means?
It's just like you can get a synthetic short position on whatever token, and like, I would say like if the compensation is high enough in native token terms, then like just lock in your price point and like hedge out at least some of the risk, right?
So what that basically means is that as these, like, let's say Solana for example, there's like a 4-year unlock for when those VCs get paid out in that token, right? As that happens, they know that they're going to get paid out at a certain price that's locked in at the very beginning. Until that happens, there are futures contracts that track the same price of the actual underlying token that you can trade on an exchange like FTX or whatever, or like even some decentralized exchanges now. What you can do is hedge out your exact exposure to the original investment that you made that's going to unlock over time and short the token in the meantime, because your price, your initial strike price that's going to unlock is way lower than, in most cases, way lower than the market price, right? So what Matt is basically saying is like, if you're going to get paid out in this token over the long term, you already have that exposure. You can take a short position in a futures market for that token and basically hedge out that exposure. If you don't know what I'm talking about, don't do that.
Not financial advice. Okay. We're not telling you.
This is absolutely not financial advice. None of this is financial advice.
Look, the issue with hedging out your exposure is like the time to consider doing that was, whenever you started getting your compensation paid out on that token. The time to do that is not now, right?
Yeah, because it's already down. Like, you can't really hedge.
And like, there's no
the way to hedge is go all in and make that thing work.
Yeah, I mean, there's no point to really considering at all what the value of those tokens ever was before. The only thing that you can do is look at it now and be like, is that a reasonable amount of compensation for me, right? And like, if it's not, then like you should probably start like networking and like looking to see if, there are still companies hiring in the space, right? It's just like harder to find now because it's not like as easy as like hitting up one of the large players, right?
Yeah, absolutely. I think the other thing is that, look, you joined the space and you joined this company for a reason. Hopefully that reason is that you believe in this stuff. And if that's still the case, then look, everything is down a ton. It's not just you, right? Like, you got to take I work at Coinbase now still. The Coinbase stock is probably one of the most wrecked things in all of crypto, right? So it's like everybody's comp is down bad. Everybody's like payouts are down bad right now, and that's just kind of the industry. But like, the one thing that I've seen over the at least one full cycle I've seen, this is kind of my second like full cycle, but even just being around in the earlier days, it's like the one thing that really wrecks you is just leaving at this point. Is, if you want to fully exit and just say like, I'm out of crypto altogether, like, I understand getting a stable income somewhere else if that's available to you. Good call. But I don't know, like, you just don't want to leave now. Like, don't be Elon paper hands right now and just be like, oh, the industry's dead, like, this is never coming back. Like, if you believe in the tech, if you believe in like what's going on, like, and you talk to people, you go, like, right now the best advice I could possibly give, this is not financial advice, of course, like, go out and meet people. Go to like stuff like ETCC. If you can't go there, go to your local meetups. Like, there are still people around, and the people that are around now will be around 3 years from now. And like, this is when everybody does wag me. It's like, if you're still gonna stick around, follow stuff, like learn, build stuff, like try things out, play with everything that comes out, like just follow the stuff that you think is interesting. Like, that is the best way I would say to go about this. And like, if you still have a job, if you're fortunate enough to still have a job, keep your job. Don't look at the price. Like, I don't know, like, this is not the time to be looking at the price, like, trying to like speculate and do that kind of stuff. This is like the heads down, focus on the tech, focus on the important stuff, and go from there.
Yeah, in a bear market, right? I really think you hit on an important point, right? Which is that like the composition broadly of the people that are around and meeting other people in the space and all that is just like different from how it was in a bull market, right? And so when you meet people, they're excited about, they're excited about the future, and even just like being around that kind of positive attitude makes a huge difference to your like day-to-day mentality. Like, being down bad is like obviously not great. But if you do believe in this stuff and you do believe in the space long term, then it's enormously helpful to find like a peer group that you can like cope with, right? Like, they can provide support to you, like with anything in life, right?
Look at how happy Matt looks after ETCC. Look at that smile. Yeah. Look, the best way is to just, learn, build, meet people, enjoy. Always
just
enjoy. And stay decent. All right, Matt. Let's get into a couple more things before we wrap.
Yeah, let's go into some.
So, speaking of
some tech stuff, yeah. Speaking of focusing on the tech,
some tech stuff. Speaking of ETHCC, Polygon made a big announcement that absolutely nobody could have seen coming unless you pay attention to literally anything.
Anything at all.
Anything at all. Yeah. Okay, so you were actually there. Do you want to give a little breakdown of what Polygon is doing, what their announcement was?
So I went to the Polygon Connect event, which was like a very interesting one to attend. And the Polygon, like the T-shirts that they gave out, literally said ZKEVM on the back. It's like, I wonder what they could be teasing. They're like, big announcement coming on Thursday. We think this could change everything. And it's like, you think it's a ZKEVM? So what is ZKEVM? So just like backing up really quickly, like super high level, like zero knowledge proof thing. So zero knowledge proofs are...
So real quick. ZKEVM is 5 different letters that is 2 acronyms combined. ZK, zero knowledge, EVM, Ethereum Virtual Machine. Zero knowledge Ethereum Virtual Machine. ZKEVM. That's what it is. Let's get into the ZK first. Zero knowledge.
So zero knowledge proofs are like an area of like math and computer science that basically refers to like being able to prove something without revealing like the full detail of all of the information, right? So this in practice provides a couple of like things for blockchains broadly. So number one, you can generate like a proof, for example, that like someone sent you 1 ETH, right? And the size of that proof will be much smaller than like just in pure data terms than the size of the same transaction fully written out like in a verbose format like on the Ethereum blockchain. So it's a compression thing. It makes it more scalable because there's just less data going on chain. You can prove that your ETH balance should be 1 ETH higher and that someone out there's ETH balance should be 1 ETH lower, but like you're able to compress that sort of thing. It gets bigger when it comes to things like DeFi and like more complex transactions, but like one thing that it provides is like scalability effectively through that kind of compression. Another thing that it can provide is a sort of like transparency or privacy, right? So zero knowledge proofs, you could say, okay, this address here has 1 ETH. These 8 addresses there all have some balance that's gone up and down in ETH. You can prove that like one of them sent an ETH, or collectively 1 ETH should go to this one, then collectively 1 ETH should be taken from these ones. You don't know exactly who's sending to whom. Okay. It's just like a layer of privacy because you're not revealing the full details of the transaction. So zero knowledge proofs are like a very, very promising way to scale Ethereum because, as you know, like the Ethereum blockchain has like relatively little block space available to it. And so any kind of compression we can get is a good thing for scalability and like decreasing gas fees and all of that, right?
And so people have been working on ZK or trying to find solutions for this and even built solutions for this that are live now for, a while now, like years.
So, I mean, two worth noting are like Polygon. They acquired a company called Hermes, Hermez, and they were working on this like ZKEVM. So just jumping quickly into EVM, Ethereum Virtual Machine, a lot of the existing efforts on zero knowledge proofs like don't fully just like natively support the Ethereum Virtual Machine, and so they only support like a subset of kinds of transactions, and it winds up actually being much more difficult for developers to build on them than it would be for them to just build on like another layer 1 like Avalanche, right?
Yeah, so the EVM is basically the machine, like the virtual machine, like that Ethereum inhabits, right? So all the apps run on the EVM. So EVM just means that like if something else is EVM compatible, you can run the same apps.
Yeah,
there,
you can run the same code,
right?
The same functions, right? It's just like the base set of functionality that like the blockchain supports.
Right, and none of the original or the previous zero knowledge solutions have been EVM compatible, right? So you had to either write in a complete, like What does it mean to not be EVM compatible? Does that mean you have to write in a different language? Like, what is the big hurdle? As somebody who does not actually do this myself, like, how difficult is it to learn, like, the previous, like, ZK native kind of, virtual machine and the language and all that kind of stuff?
It's a good question. I mean, there's, I guess, like, the primary one that comes to mind would be Starkware, right? And they have, like, a separate programming language called Cairo, which is really, really
Right.
complicated to write apps on. Like, just having, like, dug through the docs a little bit and, like, looked at, like, how you even go about writing these things. Solidity is, like, the language that you write most, like, EVM contracts in. And it's, like, writing, English, right? To write something in Cairo for Starkware, like, it's, like, actually writing, like, computer science, sorts of, like, code. Like it's way more complicated.
Interesting.
It appeals really to, like, people that are, like, very heavy in, like, math and, like, CS research, because it's, like, much closer to, like, a pure language, something like Haskell, in, like, the traditional programming world, which is just, like, the one that, like, all of the, like, real nerds love. But, like, generally speaking, like, you're never going to choose to write that unless you absolutely have to. It's much, much more difficult.
Right.
There's also, like, other ones, like, I think Arbitrum supports, like, a subset of EVM, actually, which is, like, kind of interesting, even though they're not zero-knowledge proofs. They don't actually...
What does that mean exactly?
Arbitrum, like, if you have, like, certain functions that you're calling, like, native functions in Solidity, like, you might have to rewrite your apps to, like, not use those functions if, like, they're not supported by the Arbitrum, like, environment. Just because they, like, don't have full EVM support. So they don't support, like... So full EVM support would mean that, like, you can copy-paste your code pretty much directly, right, without having to worry about, like, whether or not the underlying functionality... Oh, I went into night mode here. Dark mode, here we go. Basically, you can just port your apps over, right? Like, you have the same contracts, you deploy them here, you deploy them over there. It's basically the same. All the same, like, functionalities are available to you. With like, previous, like, iterations of zero-knowledge proofs, like, you just haven't been able to do that.
Okay, I see. Got it.
So here's the thing about Polygon
ZKEVM. How big of a deal... Yeah.
How big of a deal is it?
How big of a deal do you think
the whole
this
world
is?
wants to know that, right? So Polygon token was up, like, I think it's up like 80% over the last, like, few weeks, like, since the lows, right? Like, and, like, it was up like 30%, like, on Monday alone, right? The issue here is that, like, today people don't care that much about scalability, right? Gas fees are really low. So if you have, like, a scaling solution, like, it doesn't actually accrue that much value to you. Moreover, it's very unclear whether or how this is going to impact Matic's token at all. And so it just, like, wasn't, like, it wasn't a great, like, press release, right? Like, they just, I don't think they thought through, like, exactly how, to spin this so that, like, it would encourage people to believe that, yes, indeed, there was going to be value accrued to the Matic token. So from my perspective, like, that's one aspect that they kind of, like, could have done a better job on. From another perspective, and I think this is, like, slightly more important, right? We're getting really technical now, but, like, fuck it. There are two kinds of ZK proof. So there's Starks and Snarks. With Snarks, you have to use something called a trusted setup, which, like, indicates that you trust the, like, okay, so when you set up the, like, Stark, like, system, you have two parties and they each generate, like, a private key, and then they have to throw away those private keys. That's the only way that you can have any kind of, like, sense that, like, of security, because owning...
How do you verify that?
You can't.
That the private key is thrown away?
You can't verify destruction of information, right? It's just, like, fundamentally not possible in information theory, right? Like, even in a black hole, right? Like, there's information that, like, this is, like, Hawking radiation, right? Like, there's, like, big Nobel Prize situations. You can't act, like, there is no destruction of information in a black hole, which is absolutely nuts, right?
So what are you doing when you send something to a burn address? You're not destroying it, but what are you doing? So a
burn address sends it to, like, a public address, actually, 0x000000. if anyone ever had a
Yes.
private key that would allow them to access that address, they would actually have. It's just an address like everything else, right?
Oh, interesting.
Yeah, it's really interesting.
Okay.
Like broadly speaking, that's how it works.
Got it.
The thing about this trusted setup is like, imagine there are like two computers, right? Each of them has a private key. You need to trust that they threw away those private keys. Otherwise, they can print tokens out of thin air if they hold one or both of those. And either one of those is sufficient to generate tokens out of thin air with no way of proving that like that was an invalid transaction.
Interesting. Okay,
Yeah.
I see.
So you place
I don't
a
see.
lot of,
I mean, I'm just
you
trusting
place a lot of trust in the Polygon team if you're going to start like accepting their zero knowledge proofs.
I see. Okay, so you're basically trusting that they are getting those private keys or disposing of them.
So there's something called like a ceremony when they set this thing up, and you're trusting that they have taken away their right to God mode, which is like for any human a really difficult assumption to make, right? Like literally playing God is like pretty kind of appealing, and it's like, look, in a lot of cases in crypto, you really have to be concerned about the worst case scenario, right? It's very adversarial, and the worst case scenario, it doesn't look great, right? It's not a great outcome because you do,
Definitely not a cult.
Yeah, it's not. And look, moreover, like Polygon's a large organization. I'm sure there's somebody that I'm sure within Polygon somewhere there will be someone who, if they wanted to, could recover that private key when it gets like destroyed. In reality, like I think we just have to make this assumption about our fellow humans. Like it's just human nature to like maybe they don't even use it, but someone's holding on to that, right?
Absolutely.
That's my 2 cents on this. So I just like don't trust that, right?
Reasonable.
It's not even that I don't trust it. I don't want to trust people. That's kind of the whole point, right, of the space.
That is basically the whole point.
Yeah, and now so the issue is that like the other version of ZK proofs, like Starks, right? Like they're way less efficient. They don't compress the data as much. The research is still like probably years away from anything that's really like high quality production ready. At least with like for a full EVM compatibility setup. So I just don't see this playing out. Look, maybe it'll pump. Like, look, the Matic token pumped, right? Like, never fight the narrative, right? But I would be very, very careful. Like, I'm concerned about this, right? Because people are going to start honoring like tokens that were provided to addresses from the Polygon ZKEVM. And like, if there is an ability for these guys to like print tokens, then like that could create like an issue where like you have more than however many supply of whatever token on the blockchain. It's just not great.
Like if Polygon was going to be a malicious actor, you're saying?
Yeah. And so like I just don't know that like, for example, like a centralized exchange could take on that risk, right? Like if I were running one, I would be concerned about like the same way like I would be concerned about like any tokens that have touched Tornado Cash. I would be like really having to do a lot of due diligence on before I allow them to like sell. I would feel the same way about Polygon. I might even require that like whoever like sends me the transaction that generated that hash and the state change, right?
So is there a way to get to a more decentralized form in the way their solution is structured?
No, it's
or
just
is
snarks.
it just going to have to be this way?
Right? Like they're working on.
Okay, so all
they're working
snarks
on Stark-driven like tech, right? But like I just think that like the like fundamentals of the math and computer science are just like not really there yet.
Okay, so you're saying it's a nothing burger. That's what I'm hearing.
And moreover, nobody cares, right? Because ETH is like pretty scalable as is, right? Yeah.
We just spent 20 minutes on it, so I would beg to differ. Okay, nice. Polygon. Very interesting. To
Send
some.
it to zero.
Okay, let's move on. Yeah, send it to zero. Not financial advice. Another thing that's interesting to only some, Minecraft banning all NFTs. They basically said that nobody using their API or their services can, is allowed to, offer NFTs, issue NFTs, deal with NFTs. Which is weird. It's a 180 from their stance before. It seemed like they were amenable, and it seemed like they were going to support this stuff. The biggest project that's impacted so far is NFT Worlds, because their whole thing was built in Minecraft. So, yeah, we saw a big dip in the price of the NFT Worlds on OpenSea. Let's get the actual stats here. I think they were... So, at the highs, they were trading at above 10 ETH floor.
Yeah, I think they hit 14.15 at one point.
Yeah, 14.15. Now the floor price is 1.5. So, down bad. I think, they said they're going to put out an announcement later this week. Again, not many people care. But I do think that it's interesting because Minecraft is one of these things that anybody can, build in. And Microsoft also has made this big shift toward open source recently, and they own Minecraft. And so, I don't know, I kind of thought they would go the other way on this, but they must have their reasons.
Yeah, I mean, their whole pitch, right, against incorporating NFTs into Minecraft was effectively that it creates exclusivity, that scarcity of digital properties inherently creates exclusivity, and they don't love that. I mean, it's really interesting, right, to see someone as big as Minecraft publicly just take the stance that digital scarcity is not something we want to have in our platform. It's not a senseless standpoint, right? If you just want Minecraft to be available for all, it's somewhat incompatible with having actual digital scarcity. But isn't it open source? Can't NFT Worlds just host their own Minecraft servers?
Yeah, maybe they can. I actually had the same thought where it's so I'm not a gamer. I don't know how Minecraft works, but it's maybe you just can't use their API, right? If you're connected to any kind of activity with OpenSea, or not OpenSea, just any kind of activity with NFTs in general. Maybe they'll just ban you. I don't know. Or yeah, if it is open source, how can they ban you? I don't know actually.
Yeah, they can't ban Do Kwon for
interesting
making
to see how that works,
2.0, right? They can't ban. They can't ban someone from forking Minecraft.
Seems
right?
not.
I don't know.
True.
Bullish or bearish on the NFTs?
Look, NFT World is putting out an announcement. They made an announcement that they're going to put out an announcement. So,
the pre-announcement.
There's one thing I know about crypto.
Bullish.
That's always bullish. Always bullish. Let's go, baby. Okay, one last thing here. This is very interesting. More tech stuff. Uniswap and Sudoswap integration. Can you speak to this a little bit more?
So Sudoswap, we talked about them. I think on our last recap or 2 recaps ago.
A couple weeks ago.
I believe it was under the guise of we're never going to talk about this again. So I guess we should cover it this week that it launched. So Sudoswap is effectively they're trying to create a Uniswap style automated market maker for NFTs, where there's a pool of NFTs, there's a minimum there's a floor price, right, for the digital pool, or for the on-chain pool, and then there's a really fat spread, and so the pool will accept NFTs for some predetermined price, and they will sell NFTs for some predetermined price, and it's just based on the balance of what's available in the pool, how much wrapped ETH and how many NFTs of a given collection there are. And then there's also parameters that you can set when you create this pool, what should the spread size be, blah blah blah. And what kind of liquidity curve do you use? Do you use XY equals K kind of thing, where the last one in the pool is exponentially more expensive than the first one, or is it linear, or blah blah blah. I think it's kind of a noble concept because it really aims to put NFT liquidity directly on chain. And Uniswap is like making a big push in NFTs, right? Like they acquired Genie, like the NFT aggregator. Uniswap Labs acquired Genie, or Uniswap Foundation.
Labs, I think.
And it just makes a lot of sense that like they would partner with someone who already built out like the fundamental like primitives for this.
Yeah, because Sudoswap right now has basically no liquidity. Like, there's nothing really going on.
Yeah,
there.
and like for good reason, right? Because the spreads are ginormous, right? The spreads are ginormous,
It's
but
crazy,
the spreads
yeah.
have to be ginormous because they need to compensate people that are providing liquidity for the gas fees required to even like set this shit up, right? So they're, you know, like it's just an expensive proposition overall, and effectively the only time you would ever like get a better price on Sudo than you would on like a centralized exchange like OpenSea is like if there's some kind of like war, you know, like price war going on where it's just like absolutely ripping on the centralized exchanges, and at that point it's just going to be a source of MEV, right? Like someone's going to come and be like, oh, I can buy it here cheaply, or I can sell it here for more expensive, right? Then I can sell it. Then I would have to pay to buy it on OpenSea, and like that'll just get like arbed away. But to, you know, like it's the only reason you would execute there versus somewhere else. Now there's one more issue with Sudoswap that I would love to cover, and then I'd love to get your take. You know, they're like trying to attract liquidity by not paying artist royalties.
They're not going to pay any artist royalties.
Zero.
I actually did not see that. Interesting.
Who likes that?
Wow. How can they do that? Yeah, I know. I mean, how can they do that if like some of the artist royalties are set on chain? Like, are they just not going to?
Well, so
like, how does that work?
Being on like royalties being set on chain, you're talking about something like Manifold, right? That's just like a reference.
Yeah.
Ideally, you're supposed to pay the Manifold fee, but like the actual ERC 721 contract doesn't have a notion of like being matched against an order or whatever. It just has ownership, right?
Okay, so it has to be done at the marketplace level.
Exactly.
And then it's basically Manifold just creates a way for every exchange
for marketplaces to be able to
get
just like reference on chain data. Yeah, exactly.
Okay, I see. Okay, that's interesting. Okay, so my big take here is just, I guess I'm curious what the future of Uniswap looks like in general, right? Like, you know, you look at what they're doing with Genie, look at this partnership, look at in general, like, you know, what they did with Curve last year, right? Like, people don't really think about this, but it's like once they lowered fees for stable swaps, right? Like, they took a ton of liquidity from Curve initially. So if you kind of just like look at that, paint that picture, look at what Curve is doing. We didn't mention this. Curve is doing with their stable coin, right? Like, there's a rumor they're going to propose something or launch something similar to Aave's stablecoin, like a maker style stablecoin. So like maybe Uniswap does that at some point down the line. So the curious thing to me is just like what the future of Uniswap looks like. I think it's one of the more innovative companies in the whole space, in kind of the things that they're trying, the things that they're doing, right? Like they're very similar to FTX in a way, right? Where like FTX will try a bunch of this like crazy weird stuff that like some of it completely flops, like, you know, FTX NFTs or whatever, right? Like they were initially like driving people from the homepage directly to their NFT marketplace.
That's
and,
a really interesting
right
strategy.
Now it's doing, like,
I wonder if
literally
other
zero volume.
exchanges could try that.
Yeah, I know. Maybe they should. But FTX NFT is now at zero volume, so who knows, right? But like the point being, like they've tried this stuff, like, and so I'm just curious, like what Uniswap looks like, because they're now expanding like very much as a traditional corporation into like these many different business lines. They're making acquisitions, like, you know, they're such a unique company, like a true like Web3 like a Web3 like Andreessen Horowitz backed like almost like Web2 VC style company.
Kind of reminds me of Salesforce,
where
right? It like started out as a very high quality set of tech products, and they're just acquiring, right?
Yeah, they have Uniswap has a massive treasury.
Yeah, well, it was $3 billion.
So,
at the
like
peak,
in the billions.
Right? I don't know how much.
I mean,
of it
but
is
we don't know what their
Uni
treasury is held
token,
in, right?
But that's a good question. The future of Uniswap. I agree. I think the acquisitions are super smart, right? Because I think that the capacity for the protocol itself to like do different things, it's like pretty bad, right? Like cross-chain swaps. Like we saw like an announcement from Sushi earlier this week that they're going to partner with like Layer 0 or it might have been Stargate, I think, to like enable cross-chain swaps, which is just like not something that users are always going to get better fees, like substantially better, if they trade, if they do two separate transactions, the bridge and then the swap, right? And there's two reasons for that. One, like if you send a cross-chain swap order, like everyone gets that information well ahead of time. So if you're trading any substantial amount of money at all, you're like either you're gonna get like sandwich attacked, or like you're just gonna get like your transaction might not go through, right? If you're like, okay, like I'm gonna trade 1,500 USDC on Solana for 1 ETH on Ethereum, and like you have this cross-chain setup, like that order might not get done if like the price of ETH goes to 1,700, and while that shit's getting like confirmed, because you have to confirm like a certain number of blocks, blah 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 blah. I think cross-chain swaps just have no future. I also think cross-chain MEV has very little future for this reason, that like there's just not going to be a lot of volume. People don't want a multi-chain world, right? Like everyone wants a multi-chain world if they're a VC, right? Like this is like the most common narrative that you hear out of VCs is like, oh, it's not going to matter like what's in the back end, like the user is only ever going to just see the wallet front end. And like that's just like very like not true, because the second your fucking transaction doesn't go through, you kind of do care what's actually happening on the back end. The second you get like really screwed on fees and you're like, why am I paying 3.5% more for ETH to do it all cross chain versus I could just do it, I could just bridge through a centralized exchange and like make my trade there and pay 50 bips or less, right? Like it's just like I find it like super senseless, honestly. So cross chain swaps, to end my rant, that's not going to happen, right? Then you have like NFT liquidity. Like I'm glad they're trying it, right? I'm glad they're experimenting, but this just isn't like this isn't the way that like on-chain NFTs like order books can really scale. With NFTs, like you really have to look at them as a completely different asset class from fungible tokens, right? Like Uniswap works perfectly for fungible tokens. For NFTs, it's like really fitting square peg into a round hole. So just the nature of like having to pay like relatively high gas fees, and the fact that like all the NFTs are natively available through a centralized exchange like OpenSea versus like on Uniswap, like it used to be like, there still is a lot of tokens are not available on centralized exchanges, at least available to like people like us that are like US residents, right? If you want to, sometimes you want to buy something, Uniswap is like by far the best price, right? Or the only place you can do it. On NFTs, like you can always trade them through OpenSea because it just adheres to the ERC 721 contract standard. What I wonder is like maybe Uniswap becomes like the back end like execution engine for like any new NFT marketplace that wants to pop up, right? Like let's say I want to launch like just a discovery platform for NFTs. Right, like something that's way more social focused, like a kind of like Instagram Discover kind of thing, and you can just like float around in there. Like I don't want to build out like an order book and like a matching engine, and build out like the execution and stuff. And it's like maybe Uniswap has like an API they put out that lets you plug in there and then just have to worry with just the front end or something like that. I don't know. I think the plugin that's owned by Uniswap is Genie, right? It's not going to be a plugin that connects to on-chain order books where like you're paying $1 gazillion in gas fees and the spreads are gigantic just to like have that, right? Like if there are market participants in an NFT collection, like then they will naturally go to wherever like the transaction costs are lowest.
Yeah, no, I definitely hear you. I'm just trying to paint like the optimistic picture, like down the line, how they can try and integrate all this kind of stuff. And coming from the advantage that they have, which is just a ton of liquidity, and how can they marry these things? But you know what? These are concerns for them, not us. We're here to tell you what happened. Matt, you got anything else?
No, I think that's just about all that happened. I'm gonna go disappear into the darkness, as you can see.
Oh, enjoy the Parisian evening. I'm very jealous. Have a nice walk on the river for me. And we will be back early next week with another deep dive on Lens Protocol. If you don't know what that is, it's going to be a fascinating one. We're both very pumped. So we'll see you early next week. Have a good weekend, everybody. Till then, stay decent.
None of this was financial advice, legal advice, investment advice, or any other kind of advice. If you're looking for advice, you are definitely in the wrong place. Until next time, stay decent.